Hey there, welcome back to the Patrick Lane Show, where we talk about investing, personal finance, and real estate. Thanks for coming back and checking us out. Do me a favor, just right up front before we get into anything, hit that like button and subscribe if you haven't subscribed. You know, we're checking the stats on some of our videos, and it looks like 90% of the people who watch aren't subscribed. So do me a favor, subscribe. It would really help us out. Now, let's go. Today, we're going to talk about GameStop again. Can you believe it? Another video about GameStop. But here's the thing. GameStop, some people are saying, has still not been shorted to the point where the short squeeze is over. And the reason is because some people are looking at the data, the analytics, and seeing that there are certain ETFs that own a lot of GameStop that are now being shorted themselves. So for example, first of all, an ETF is an electronically traded fund. So that's sort of like an index fund, except it's not the entire index. It's just a basket of funds that some company will put together, a brokerage will put together. They'll offer it out to the public as a basket of funds that you can invest in. Well, some of those are holding large portions in GameStop. And actually, XTR is the ETF that is holding the most position in GameStop. That is the largest position that it has within its ETF. Now, it's got other retailers in there, but the largest amount of shares that it has in its ETF is GameStop. So, you know, you would think an ETF would look around and say, well, you know, we're going to look at other retailers because, as everybody knows, the idea was back in the summer that GameStop was going to go out of business because it was primarily brick and mortar. And the price was down to $5. Everybody in the sort of legacy media was saying that the business was going to go bankrupt and it was going to be liquidated because it was just a dinosaur model where you had to go to the mall or you had to go to the shopping center in order to walk in to GameStop and purchase something. But if that were the case, the story goes, or the people on Wall Street Bets and Reddit are asking, why would this ETF have so much in GameStop? And so now the hypothesis is that a lot of hedge funds have bought into the ETFs in order to cover their positions in GameStop. And so while they were exposed to the shorts, or to the short squeeze that started happening a couple of weeks ago when, as we know, the price ran up to $483 per share on GameStop, the way that they covered was they were able to buy into the ETF, like XTR, and then because they are large purchasers, then there's a process that allows them as a large holder of the ETF to then destroy those ETF shares, break them out, and convert that to the underlying shares of stock that are in the ETF shares. And so if an ETF share has a share of GameStop, has a portion of GameStop, has a portion of Kohl's, has a portion of Macy's, has a portion of whatever retailer, the hedge fund can purchase shares in that ETF, and if they buy enough of them, they can liquidate those shares, destroy the ETF share, and hold those underlying shares of those individual stocks. And the hypothesis on Wall Street Bets and other places is that that's exactly what some of these hedge funds have done, that they went out and purchased these shares in the ETFs and are now destroying those shares and holding in the ETF, which allows them to hold the underlying shares of the stocks that were in the ETF, in this case, GameStop. So what does that mean? Okay, this is a sort of an archaic process that not many people really know about, behind the scenes, how things work. But what it allows the hedge funds and anybody, frankly, who shorted GameStop, what it allows them to do is, remember, the short was caused because they had shorted the stock, but in order to cover your short, you have to actually own the stock that you've shorted. And so they had to buy that stock, not just borrow it like you do when you short a stock, but in order to cover it, they actually had to find the stock, buy it, and hold it themselves. And so when they were trying to buy the stocks, that was driving the price up. And then the retail investors were buying more stocks, and it drove the price up. And then the people covering their shorts had to buy more, which drove the stock up. And so it was this escalating staircase of the price going up. But if they were able to, behind the scenes, buy the ETF shares and then dissolve the ETF shares and hold the underlying shares of the stock, then they were buying in at a different price that did not affect the overall price of the GME shares. And so the effect that would have had was to allow the GME price to drop back down, because they were covering their positions, eventually owning the stock itself, but they were covering their positions without having to buy in at the higher price. So what does this mean going forward? Well, again, a lot of the due diligence out there is suggesting, and again, I should say that I'm not a financial advisor. Don't take this as financial advice. I'm just some guy on YouTube who's talking about what we're seeing out there in the financial market with regard to GameStop and the short. So what that means for the future, a lot of people are looking at due diligence and seeing that there are a lot of shorts that are coming, or call options that are coming due in the middle of March. There are a lot of puts that are coming due on GameStop in the middle of March. And the dividend that's being paid from the ETFs in the middle of March has to be covered by actual shares that they own. Otherwise, there's an additional penalty that they're going to have to pay on top of that. So all of these things lead to a middle of March time frame for the actual GME short to run up again. Now, is it going to go back to the $483? Who knows? Is it going to go to $1,000, to the moon? Who knows? But the fact that this ETF is now itself shorted 200%. So they've shifted the short from GME at 140% to the ETF that holds GME being shorted 200%. And all of the call options and the puts and the dividend pressure from the ETF, that leads a lot of people who are digging into this to believe that the middle of March 15th, 16th, 17th, 18th, 19th, something like that, is going to be the time when the real short squeeze for GME happens. Now, is that the case? I don't know. We'll see what happens on March 19th, for example, the day before the ETF is supposed to issue its dividend, whether that's going to really make a difference in the price or not. We'll see. We'll all be watching. I'm sure we'll be doing a video to talk about that. But as of right now, if you are a holder of GME, you probably still want to hold. If you are inclined to buy back in, just like DFV did, we talked about how DFV doubled his position. He bought another 50,000 shares just the other day after testifying in front of Congress. And in fact, if you want to check that video out that we did, it has a little bit of his testimony in the video where he talks about why he likes the stock. And it also gives a little bit of analysis about what happened that day in Congress. We're going to show that video at the end, so check that out at the end of this video. But what this all means is that everybody thinks, the CNBCs and the Bloomberg TV and Fox Business, the Wall Street Journal, everybody thinks that the GME short is over. And what a lot of people in the Reddit community and the investor community online are thinking is that it's not actually over, but rather the can for the short has been just kicked down the road. And so moving the short from January 28th to March 18th or 19th is all that's happened. So we'll have to wait and see, but that's what the analysis is showing now. So That's it for today. I hope you got some education or entertainment out of this video. If you did, do me a favor and smash the like button for me. I really appreciate it. Again, we're trying to grow the channel, and it's going to help really a lot with the YouTube algorithm for you to hit that like button. Also, do me a favor. Mention down in the comments whether you think the GME short squeeze is over. Is it done? Is it gone? Is GME a dead stock? Is the short squeeze over? Or do you think, based on the due diligence that you've done and the things that you've read, is GME short squeeze still going to happen? Comment down below. Let me know what you think. Check out the video about DFV's Roaring Kitty's testimony in Congress, and we'll see you on the next video.